Trading psychology cost me $50,000 in my funded account. But after discovering these 3 psychological secrets from professional traders, I completely transformed my results. In this video, I'll show you exactly how professional traders think differently and why most retail traders keep losing money even with profitable strategies. Before I reveal the first secret, let me ask you something. If I offered you a game where you could win $10 when you're right and lose $5 when you're wrong, would you play? Most traders would say yes instantly. But here's what professional traders understand that others don't. Let's say we flip a coin and you bet $5. Heads, you win $10. Tails, you lose $5. Sounds great, right? You probably bet big because it seems like guaranteed profit. But here's what professional traders understand about probability that most of us miss completely. In any 50% system, you are guaranteed to get string of losses. Let me break this down with real numbers. If you are trading with a 50% win rate, out of 100 trades, you will definitely encounter 4 consecutive losses. You will most likely encounter 5 consecutive losses too. There is a 78% chance that you will experience 6 consecutive losses and a 52% chance to experience 7. Now, let's take a look at 9 consecutive losses. If you are trading with a 50% win rate strategy, you have a 16% chance of losing 9 times in a row. You think that that's not likely to happen, but statistically speaking, it is possible. Now, let me show you why this matters so much. Let's say you start with a $10,000 account. If you're risking 20% per trade like I used to, just 3 losses in a row would wipe out half of your account. And remember, 3 losses in a row is guaranteed to happen with a 50% win rate system. This is exactly why professional traders never risk more than 1 to 2% per trade. They are not being overly conservative, they are just being mathematical. But here's where it gets interesting. 2 traders trading same strategy with the same market condition can produce very different results. The only difference, one was trading with emotion and the other one was trading with the system. Let me show you exactly how to move from trading with emotion to system. The business owner mindset. Professional traders treat every aspect of trading like a business. You have to treat trading as a business. Imagine an owner running a restaurant. He incurs expenses such as salary, utilities, rent, and food cost. He can't operate his restaurant to earn revenue. This is the same as trading. Losses are your expenses. You can't profit from the market if you are afraid of losing. Step 2. The loss planning system. This is crucial. Instead of hoping for wins, we plan for losses. Here's how. You need to understand that every trade you took, there are 5 possible scenarios. A big win, a small win, a break even, a small loss, or a big loss. Being a trader, you have to avoid a big loss at all cost. By taking a trade with decent risk management, you will know that you can avoid a big loss all the time by risking 1 to 2% of your capital per trade. Position sizing is crucial in understanding the loss planning system. If you have a 30% win rate system, then expect most of your trades to have a small loss. This will prepare you psychologically whenever you take a trade. Step 3. The Identity Protection Protocol. This changed everything for me. Professional traders protect their identity at all costs. If you are unable to prevent yourself from breaking your trading rules, make it part of your identity. Tell yourself that you don't break rules. Yes, this sounds fluff, but if you are able to make never break any trading rules a part of your identity, it's easier for you to just follow your trading rules. You don't go brush your teeth just because you have a rule saying that you have to brush your teeth. You brush your teeth because you want to maintain your oral health. It comes naturally for you to brush your teeth every night before you sleep and after you wake up. This is called identity. However, identity isn't easy to build. It takes time. However, building identity isn't easy. It takes time. So while you're at it, building your new identity, you need circuit breakers. Level 1, when you encounter 2 losses in a row, take a 2 hours market break. Write down how you feel in your psychological journal entry. Level 2, if you break any trading rules, end your trading day right there. Write down your full trading review and identify why did you break your rules. Once you break 3 rules in a week, stop trading for 1 week. Take a step back and understand why did you break so many rules this week. Having these circuit breakers will act as a gap between you taking multiple trades that might not be according to your trading rules. So instead of losing more money, you'll be able to take a step back and reflect on your emotions. The emotion tracking system. But our trading system only tracks your entry, stop loss, date, time, pair, and screenshots of your trades. You're missing the core element of trading, your emotions. I have a free trading journal that tracks your emotions. You can download it down in the description below. By analyzing your traits and emotions, you will know what are the triggers and emotions you feel before taking any trades. When you are calm and don't feel many emotions, that is when you know you are following your rules instead of your emotions. Step 5. Implementation plan. Here's exactly how to implement this system. Week 1. The business system setup. Set up your trading hours, create position size calculator, and set up daily review process. Week 2. The circuit breaker setup. Set your risk limits, 1% per trade maximum. Write your circuit breakers rules and create your identity. Download my free trading journal with emotion tracker, link in description. Read every trade you take without changing anything. Identify your emotional patterns. Full implementation. Start with a 50% normal position size. Follow all circuit breakers and write down in your psychological journal every day. But before you start implementing this system, there's something critical you need to know about handling drawdown. Click on the link below where I reveal the secret to maintain discipline during losing streaks in my newsletter. I'll show you why most traders start their day already setting themselves up for failure. Now let's move on to the trade breakdown.
Hello. So this is the trade recap for the week of 9 December to 13 December. So the first trade I took is on Monday, 9 December. So I was stocking this 4 JPY pairs. The reason why is because we have a strong impulse up, right? This is hinting us that money is coming in and it is to the bullish side. I was actually stocking EJ and GJ at the same time. This GJ actually tapped me in first. We have a huge pause over here, so it's kind of a reset for me. When price push up once, this is the first base where I went down to a lower time frame. But before I even go to a lower time frame, I was actually stocking this price action already. Once this push higher happened, it will be like lower low, higher low, higher high, higher low, higher high, higher low, higher high. At that point in time, price was already showing bullish intention to go higher. As you can see, on a higher time frame, we have this bullish push up and we have the first base here. So I was expecting price to continue rallying higher. On a lower time frame, as you can see over here, my entry criteria flush. We made one demand zone and a second demand zone, and set a buy stop over here and waited for price to push higher. It's quite a nice trade to begin with. Or before that, actually my stop loss should be like this. It could potentially netted me for the max RR ran is 4.4, but I actually do it wrongly. This was my actual entry. It ran a maximum of 2.2 R, and my break-even rule was because we saw bullish impulse price tried to go down to mitigate whatever areas that there are. After this candle, right, I was waiting for price to break higher than this high. Once this candle form was breaking higher, I shifted my stop loss to break even. I held it because I was thinking that since this is the first base, we could have more to go. I was expecting a base over here continue higher, which was why I drew it over here, right? My expectation. But price went down, flushed, right? Flushed through my stop loss and continue higher to my expectation. So this is a break-even trade for me. Happy because it followed my rule. Right. So this is the end of the first trade analysis. My second, third, and fourth trade for this week. And the second trade was on UJ, right, on Wednesday, 11 December, London session. So similarly, we look at the middle time frame. Over here, we see an impulse up and a retracement. So in my mind, it was higher high, higher low, and higher high. Then once this happened, I confirmed it with the higher time frame, which was quite bullish at a point in time. So, there's this support from the MA also. So I went down to the lower time frame for my entry model, and we see there's a flush, and we have two demand zone. So set a buy stop over here with stop loss protecting this lows over here, and price did quite a nice push up, right? Giving us a 1.42 R. So in my mind, I was expecting price to break. I was waiting for price to break this high over here before I move my stop to break even. But unfortunately, as you can see, price came back right down and took me out. Okay, so that is my second trade for the week. And my third and fourth trade was over here on 12th of December. Okay. So the first trade, as you can see over here, let's go to the middle time frame first. So similar to the UJ trade, I was expecting price to continue higher. So over here we have higher high, higher low, higher high, higher low, and I was expecting price to go higher right from here, because we have the support from the MA and we have experienced a higher low over here. So this is also confirmed on the higher time frame. We have a beautiful bull run on a 1 hour time frame. So I went down to the entry time frame, wait for my entry model. So we have this major flush over here, and price pushed higher, right? Reclaimed the MA and created two demand zone. So I set a buy stop over here, protecting the lows over here. And as this candle was forming, right, I shifted my stop loss to break even, because there is a very strong impulse over here on a 1 minute time frame. But unfortunately, it came back and took me out for the first position. So this was a break even. And I waited for another setup, because right over here on the middle time frame, price is still playing well within my expectation. So with this support from the MA, I was still expecting price to go higher. And of course, the higher time frame doesn't change much. So I went down to the entry time frame for my entry model. And over here, you can see after my position got tapped out, they did another flush and did reclaim the MA, also creating two demand zones. And I set a buy stop over here at this candle. So, price tapped me in, right, with a very strong impulse candle. But I was waiting for price to actually move higher, because there's this consolidation over here. So I was expecting price to continue higher, much higher, if this is the real accumulation. But unfortunately, price just came back and tapped me out. It played around, right? So I was expecting price to continue higher already. So over here, I should have closed my position at break even, because when this candle is actually forming, you can imagine this being a big green candle. But unfortunately, right, when price is unable to sustain that bullish momentum and it closed lower, right, than it actually opened. So this could be really a sign for me to close early. Of course, on hindsight, this is pretty obvious. But if I were to close early, it will be at this point in time probably around 0.5 R loss. So price tapped me out, and I believe it went higher according to my analysis. Okay, so that is all for this week. And to recap, so it's been a month since I started giving out free signal. Started on 19th November. So this is, I think it's a third or fourth week, right? Probably it's the fourth week. So my results so far, there's 5.13 RR. Currently, it's still very little for any sort of analysis, but I would assume my equity curve will be going up, right, across over a long period of time, given the edge that I have. So see you in the next video.